Welcome back to another episode of our City by City Market Pressure Review series. I'm Junge, the Senior Research Analyst here at InvestorKit. For the first episode of 2025, let's have a look at Townsville. Townsville is no doubt one of the hottest markets across the country. In 2024, the house prices there increased by almost 23%, and that is the highest among all Queensland cities. So in 2025, will this strong growth continue? Let's try to find out with 10 charts today. But before we get into the charts, if you are a data-driven property investor, you're at the right channel, because data is what we do at InvestorKit's research team. So if you like our content, make sure to subscribe so that you don't miss anything we release each week. Now let's get started. As usual, for Townsville, the 10 charts will be covering the demographic and economic trends, the sales market trends, the rental market trends, and then in the end, I'll be giving you our forecast on Townsville in the coming 6 to 12 months based on what we've seen in the 10 charts. Now, chart 1 here is the overview of market performance in Townsville. As you can see, Townsville scores the highest in all 6 metrics that we use to measure market performance. From price pressure to rental pressure, from rental return to affordability and incoming supply level and growth cycle position. I'll be using the next 9 charts to explain them more in detail. Chart 2 here is the migration trends and population growth trends over the past 6 years. Population growth rate now is around 1.4%. If we compare it with the other regional cities or the Australia's average level, it may seem relatively low. But if we compare it with itself over the past decade, we'll see that it's actually improved a lot. And this improvement is thanks to 2 things. One is the improvement in internal migration from negative to positive growth. And then 2 is the surge in overseas migration. Moving forward, I don't believe that the overseas migration will stay high forever. Over time, it will come down to a more sustainable level. But at the same time, I do believe the internal migration will stay strong because of its active local job market and economy. And that is what we are looking at in chart 3. Unemployment rate in Townsville has been increasing since 2023, but it is now still below 4% and is well within the full employment range. And also, if we compare it with its last 10-year average, we can see that it is still much lower. And at the same time, the number of job opportunities is still quite lifted if we compare that with its pre-COVID level. So overall, the local job market is more active than ever. And we believe this active local economy and the abundance of job opportunities will continue attracting people from other cities to Townsville. Now let's move to the sales market trends. Sale days on market in Townsville has been declining for most of 2023 and 2024. And in the last quarter of 2024, it has stabilized at around 11 days on market. One thing I want to mention here is that 11 days is actually the median days on market instead of average. It would be much higher than 11 days if we were talking about average. But even for median, 11 days is an extremely low level, indicating really high market pressure. Another indicator that is showing high market pressure is the inventory level, or the relationship between demand and supply. Chart 5 here shows this rapid decline in number of for sale listings in Townsville since 2023. And as of the second half of 2024, it has stabilized at a very low level. But at the same time, the number of sales over 2024 has slightly increased. So as a result, we have seen this rapid decline in inventory level, and now it is staying at a extremely low level of around 1.1 to 1.2 months of stock. As a result of the high market pressure, we can see that the house prices in Townsville has been increasing steadily over 2024, and over the whole year, it has increased by almost 23%. In the previous charts, we have seen that Townsville's established supply level is much lower now than in previous years. And at the same time, the incoming supply level is not high either. Chart 6 here shows the new home building approval percentage over the past 10 years in Townsville. Currently, this number is 1.2%. That is not much higher than the lowest level over the decade that we saw in 2019. Overall, we do not see oversupply risks in Townsville because of two reasons. One is that this 1.2% is much lower than the balanced level of 2 to 3%. And two is that we do not see a dramatic increase in building approval numbers or rates at this moment. Then we're looking at the long-term price trend. In this chart, we are comparing Townsville's last 10-year growth trend with the top populated regional cities' average level. So over the past 10 years, Townsville's house prices only grew by 43%. That is much lower than its own long-term average, and also much lower than the big regional cities' average level. And then if we look at the last 5 years, the two numbers are actually similar to each other, 61 versus 67. But one thing we would like to note here is that although the total growth amount were similar, the growth patterns were different. Most of the top populated regional cities are in Southeast Queensland, New South Wales, and Victoria. And most of their growth over the past 5 years happened actually during the COVID boom time. But for Townsville, during COVID time, it didn't grow much. The most growth happened in the past 1.5 years to 2 years. So based on Townsville's low last 10-year growth and its current high market pressure, we're confident to say that Townsville has a lot of room ahead for further growth. And now the trends in the rental market. Townsville's rental market pressure is still high with an extremely low vacancy rate of 0.7%. As a result of the high rental pressure, prices have been growing steadily and have achieved a 9.6% annual growth over 2024. 9.6% rental growth in a year wasn't bad at all, but it's not as fast as Townsville's sales price growth. And that is why we're seeing this declining trend in rental yield in Townsville. But despite the decline, the 5.5% rental yield is still much higher than most regional cities. And before we move to the next chart, I would like to make a note here about rental yield. For many North Queensland cities, gross rental yield may seem very high, but in reality, your net rental yield may not as high if we consider the higher holding costs in these regions. For example, the higher insurance premium, the higher council rates, and the higher property management fees. The last chart, long-term rental growth. In the past 10 years, Townsville's house rental prices have grown by 52%, and that is much lower than the biggest regional cities' average. And considering Townsville's high rental market pressure now, we expect the gap between these two trend lines to close further in the coming year. Now, the forecast. In the coming 6 to 12 months, we do not see signs of slowdown in Townsville. Based on the active job market, the low days on market, low inventory level, low vacancy rate, and the favorable position in its current market cycle. In 2025, interest rates are expected to go down, but the decline won't be too dramatic. Therefore, affordability will remain one of the primary drivers for growth. And Townsville, being one of the most affordable markets across the country, will benefit from that. So that was Townsville in 10 charts. I hope you enjoyed it. If you like our content, remember to subscribe so you don't miss any new release. I'm Junge, the Senior Research Analyst here at InvestorKit. I'll see you next time.